What's going on, guys? Today I'm gonna have an episode of too much news. Literally, because there's so much news today, I'm gonna try to jam pack it all into one episode. We're gonna talk about Nintendo. We're gonna talk about the hottest stocks, Aurora Cannabis, Canopy growth, Tesla, AMD earnings coming up, and more. But before we get this video started, don't forget to give me a thumbs up. And if you're new to this channel, don't forget to hit that subscribe button. I update almost daily. So let's look at the hottest stocks today. One of the hottest stocks is actually a stock that one of my viewers brought up this morning, and it was MBIO, Mustang Bio Inc. So this stock went up 112%, and actually they were very hot this morning, and I timed this stock horrible. That's to say the least. I ended up buying this stock in at $8.90. I put a sell order at $8.50 just to minimize my losses, and I'm pretty much glad I did that. So I ended up losing, I think, 20-30 bucks in the stock. I bought like 100 shares, so it was a very small position. I did lose a small amount of money on it, but I just thought that it was possible that I could make potentially some big gains on this stock, and I didn't. But luckily I cut my losses when I did, because of course, as you can see right now, this company is currently sitting at $5.62, but this company did pop up 111% yesterday. That's because this news: Mustang Bio Soars 485% after its novel gene therapy cured bubble boys. So the one-time therapy is crafted for each individual patient by engineering stem cells from their bone marrow to express a health copy of a gene they didn't get at birth. A study in New England Journal of Medicine followed that the first 8 boys to get the therapy, tracking the development of the full immune system in each, that allowed them to be released from the hospital and live normal lives. So if you guys want to check out this full article, you can check it out. Mustang Bio soars 485% after its novel gene therapy cured bubble boys. And as you can see right here, this stock had a huge run today. But we're here to talk about more than just one company. Another company that was on fire today is Nintendo, currently up 12.9%. And there's a few reasons as to why Nintendo stock popped today. And what do you know? There's a headline titled "Why Nintendo Stock Popped Today." Shares of Nintendo were up 13.6% as of 1:30 p.m. Thursday after news emerged that the company's Switch gaming console will soon begin selling in China. But Nintendo won't be selling the devices directly, according to a report from Reuters this morning, citing a release from China's gaming industry regulators. China-based tech giant Tencent received an approval to distribute the Nintendo Switch console with a test version of the new Super Mario Bros. Ultimate Deluxe game installed. So the move comes more than 2 years after the initial global launch of Nintendo Switch console, but entering the Middle Kingdom proved difficult for the Japanese video gaming leader, as it sought a partner to help navigate the country's complex array of regulatory restrictions. On that note, perhaps it's no coincidence that Chinese government only recently lifted an extended freeze on approvals for new gaming titles that significantly impacted Tencent's own growth over the past year. Now what? To be clear, Nintendo Switch's arrival in China isn't a sure thing just yet. According to the Chinese regulator's statements, Tencent applications has only been provisionally approved pending a comment period that ends on April 24, 2019. Assuming that the day comes and goes without a hitch, however, it would open a massive new source of incremental growth for all parties involved. So this looks like very good news for China, also for Tencent. Right now, Nintendo stock is currently up 12.9%. Investors are happy and very confident in this news. And we'll be keeping an eye on Nintendo. I personally hope this goes through because I am currently a Nintendo shareholder. I do have some lines drawn in for Nintendo. I'll let you guys know when I plan on collecting profits. We're going to look at the 1-year chart. So this green line right here is when I'll start collecting profits. This blue line right here is a strong sell for me. This red line right here would be a strong buy. I'll give you the prices. This would be at around $46. The blue line's at around $53, and the red line is at $34. So buy, collect profits, strong sell for me. But let's move on to the next news, which is about Aurora Cannabis. Aurora Cannabis launches search for Canada's top Budmaster. So calling all Canadian bud tenders, Aurora Cannabis is kicking off the search for Canada's top Budmaster through a national competition that will recognize cannabis professionals across the country who are guiding consumers as they navigate the new world of legal cannabis. Through a series of skill-based and knowledge testing events, as well as through digital competitions, Canada's bud tender community will be able to demonstrate their expertise in cultivar characteristics and histories, product categories and formats, exceptional customer service, and must also showcase how they contribute to the community and culture. So if you guys want to enter, there's actually a how to enter right here. Aurora invites all professional bud tenders who are currently employed by by an authorized cannabis retail store to see if they have what it takes to become Canada's top Budmaster by registering here. And I'm going to try to leave this link in the description below if you guys want to enter to be Canada's top Budmaster. So I've already talked about this yesterday. I made a video titled Canopy and Acreage Holdings merger deal, which I also talked about Aurora Cannabis and Hexo Canopy having a new price target from Bank of America. And in that video, I slightly touched up on this news, but here I'm going to give you guys a little more information. Can never have too much news, right? So the details of the deal. Canopy Growth will pay about $300 million upfront cash to Acreage and will have the right to acquire the remaining company in a deal valued at $3.4 billion, which represented a premium of 41% according to the press release. Canopy will be entering the US. The US has become a big focus for Canadian cannabis companies. The market potential is huge in comparison to Canada. More and more companies, including Aurora Cannabis, Aphria, and Tilray, are making strategic advances in the market. Acquisition of Acreage Holdings is Canopy Growth's strategic move to enter the U.S. In its press release, the company chair and co-CEO Bruce Linton stated that today we announce a complex transaction with a simple objective. Our right to acquire Acreage secures our entrance strategy into the United States as soon as federally permissible. He further added that this combination will create huge value for shareholders. Really good news for both Canopy Growth and Acreage Holdings, and surprisingly, Acreage Holdings went down 0.8% today. Had a very nice run and then followed by a huge sell-off throughout the day. Okay, so looking ahead, Azure writes that although the shares have already had a good run in 2019, the fundamental points to more gains for Aurora. Even with scale opportunities ahead of them, Aurora is off to a good start, having delivered one of the highest gross margins among the leading Canadian licensed producers. She writes, noting that in the trailing 12 months, Aurora delivered a 61% gross margin, well ahead of its peers. For now, demand on cannabis may look artificially high given supply issues, but ultimately she's predicting that more meaningful growth in the second half of 2019 for Aurora, particularly as it benefits from retail rollouts in the areas like Ontario. Like other analysts, she is happy to see Aurora expanding internationally in places such as Germany and moving ahead with new delivery forms like vaping. She said she was also happy to hear management say it won't be rushed into the US markets for niche products like THC, which have the potential to cut into margins. I already made a video about Zoom, and as you can see, if you guys checked out Zoom stock today, they IPO today with the ticker symbol ZM, and they pretty much skyrocketed today. So here's what Zoom CEO had to say after IPO rockets company to nosebleed valuations. So Zoom went up 73.39%, priced at 20.9 million IPO shares at $36 Wednesday evening and hit an intraday high of $66, a whopping 83% gain in their trading debut. Thursday on NASDAQ, shares went up. Shares were last up 76% at $63.30. The company filed for its IPO in late March and had raised its expected pricing to a range of $33 to $35 a share on Tuesday. So when asked about the high ratio, Eric Yuan, Zoom's president, chief executive, and chairman, told MarketWatch in an interview that he is not bothered by the high valuation ratio. Yuan holds a 21.1% stake in the company, which would be worth about $3.6 billion at the top share price commanded Thursday. Yes, I am comfortable with the valuation because we focus on the market share to get more customers to switch to our platform, Yuan said in a phone interview from New York. And on to some more news. Tesla, not much hope left for the bulls. So demand is rapidly running out. Fans are becoming delusioned by long wait times and delays. The autonomous vehicle thesis has been debunked by Navigant and even near 2019 lows. Tesla is still a very dangerous investment. So I currently have a buy order for Tesla at $255 American. If Tesla does drop to that price, I won't be disappointed because that's actually the price that I would love to buy Tesla at. Let's keep in mind, this is an article probably written by a short seller, so it's not my opinion. I'm simply reading you guys what I'm seeing right now. And here's another article probably written by a short seller, but Canopy Growth is done with Canada. Where to next? So Canopy has dominated the Canadian cannabis market thus far. It is highly unlikely that Canopy will be interested in any more Canadian assets due to overlap and excessive capacity. We think Canopy will focus on international expansions and vertical integrations in its future M&A activities. So during an interview on January 15th, Canopy co-CEO Bruce Linton said that the company won't be looking at any Canadian assets when he was asked about whether Canopy is looking at Aphria. We think Canopy's answer is not surprising to us. The company has been very active on M&A front, but Canada was notably missing from its most recent announcements. And it doesn't come to a surprise that they're actually trying to get in the United States with their acquisition of Acreage Holdings. So this is the last article, which is AMD earnings. AMD earnings are coming up. I'm just going to read to you the summary. Reports its first quarter earnings in 2 weeks. Investors should closely monitor AMD's shipment and ASP trends, the magnitude of its OEM design wins, and its server market share gains in its Q1. The analyst consensus and management guidance are coinciding, which suggests that neither of the two are going overboard with their estimates. AMD earnings are coming up in approximately 2 weeks, so it'll be very interesting to see how those results come out. Anyways, that's it for now. For too much news, I try to jam pack this in as little time as possible. If you guys enjoyed this video, don't forget to give me a thumbs up, and if you're not subscribed, don't forget to hit that notification bell, smash that subscribe button, and that's it for now, guys. Bye bye.